What's up, Banter fam? Welcome back to the show. In today's show, we have a lot to talk about. We just had the FOMC, and the market is reacting quite negatively to the announcement of the 75 basis point rate hike. So I want to go through exactly what happened in the FOMC yesterday and what this means for the next few months of crypto, given the fact that we now do have more clarity over the Fed stance for the remainder of 2022 and beyond. And then after that, I want to flick it to the audience and answer some questions off my Twitter about some projects that you guys are interested in and have a quick look at those ecosystems and see how they are developing so we can try and identify the next upcoming narratives in this market, after all this kind of rate hike stuff has kind of suppressed a little bit. But let's get straight into the video because there is a lot to discuss, everyone. A lot has happened overnight, and I'm going to give you my take on the entire situation. So if we do look at the Bitcoin chart right now, we can see that this range low we've just broken through. So we were on critical support yesterday at 18.6. We've broken below that. It's interesting to note, though, that the very bottom wick was 17.5 from this last drop. So that is kind of our next level that I'm looking at, and that's really the next level that Bitcoin needs to hold to maintain structure here. At some point, though, it is likely. I think the balance of probabilities are that we are going to break this. I don't think it's a matter of if. I think it's now a matter of when. And then obviously we have those lower price targets of 12 to 14K. Some traders are saying 14 to 16. We don't have a crystal ball on exactly what that wick downwards might look like, but I don't think it's coming in the next week. I don't think the lows are necessarily going to happen right now, like some traders are saying. I think there's a little bit of momentum in this area, or a little bit of support in this area for the time being. So I don't think it's necessarily a scenario to panic about, considering, we are in the lead up to midterms in a month. Typically, the market will respond positively leading into midterms. I mean, the Democrats need to do something, right, in order to bolster their campaign, because it is looking shaky. So it's hard to see like them wanting to crash the market significantly in the week leading up to midterms. So if we do see that crazy low, I kind of am expecting it right now to happen after midterms, possibly mid to late November, December, or even Q1 next year. That's kind of the timeline I have. Of course, it's a rough 3 to 6 month timeline, because it can happen at any point after that point. But that's kind of how I'm trading with that thesis in mind. That's likely when we see significant capitulation, because I don't think this is it if we actually look at how low things can actually go. So that does mean there is a chance for relief in the short term. However, the bullish narrative, or the bullish case for crypto that some were pointing out, relying on a Fed pivot, I think that bullish case has taken a significant knock, considering they did raise by 75 basis points. Now, we knew that they were going to do this. So the market reaction is all based on the tone of Powell's speech, because basically before every FOMC, we kind of have a good idea of how they're going to hike. We always said 75 BPS. They hiked 75 BPS. And I think the real damage was done in the market sense in some of the language he used. Now, I'll just come out and say right now that I don't think the language he used was any different from that he used at Jackson Hole. I think it was quite similar. I don't think anything changed from the Fed's stance either. What did change slightly was this document that we got, and this was the graph which outlined the proposed monetary policy, showing that the predicted rate hikes over the next couple of years. And this basically captures FOMC participants' assessments of what monetary policy would be appropriate in terms of upcoming rate hikes. So the midpoint of the target range of the target level for the federal funds rate, or the cash rate, in other words. So we can see here that 2023, they're expecting to top out this cash rate at around 5%, 4.75%. That means that we could well see rate hikes into 2023. And I think the market relying on a pivot at the end of 2022 was one of the things that was keeping a little bit of hope into risk assets, that we could see, a bottom in the short term and then hopefully a rally after that. I think now it's starting to look like, and we've kind of had this feeling for a couple months, that we are going to see sustained rate hikes into 2023. They are kind of in a checkmate position, though, in a sense that if they do keep hiking, we could see a situation where they end up forcing the US into a depression. That's going to force a pivot. A sustained recession is something no one really wants to see. As soon as that starts to really hit the data in terms of the jobs data, employment figures, they are going to have to pivot. But I think they have a little bit of a license just in the short term, while inflation is being extremely stubborn. I mean, we did have inflation at 8.2% again, slightly up on the month to month, and most goods were actually up. The only thing that came down was energy, and you could make a strong argument that the energy prices were manipulated. So if we do look at kind of like a broad overview of things and how they're sitting at the moment, it is likely that we see hikes into 2023. That's nothing new, by the way. We kind of knew this would happen, but it does just kind of underpin that entire FOMC with that hawkish tone that people wanted to kind of see, maybe switch a little bit more dovish. And Macro Alf said this dot plot is massive. 12 out of 19 FOMC members expect Fed funds between 4.5 and 5% by the end of 2023. Probably pushes out our time horizon here for a potential bear market by a couple months. I don't think it changes it much more than that, but it definitely maybe adds a couple extra months of headwinds in terms of our time horizon here. TED Talk said, Powell says the message hasn't changed since Jackson Hole, setting the tone hawkish. That's certainly what he did. He came out, he was hawkish, except he did chuck in some dovish comments here and there, which was interesting. He basically towed the line, which means he kind of strayed from making rash comments in either direction. They kind of let the data speak for itself. They let the rate hike speak for itself, and they let their previous tone that they said at Jackson Hole speak for itself, and nothing really new really developed, apart from like a couple interesting statements, one of which he said, he wanted to crash the housing market or something along those lines, or the housing market needs to correct. I've forgotten the exact comment he made, but that did spook some people because we know how resilient housing has been. So if that takes a knock, that does have downstream effects on equities and crypto, etc. Alex Kruger, a good macro analyst, said clearly extra hawkish on the dots, 4.6% by end of 2023, in line with kind of the expectations here from the panelists, higher than the market had priced in, much higher than June's dots. So this is kind of scaled up in a sense since what we were expecting to see from June, hence why the Bitcoin price, and not just Bitcoin, but the NASDAQ also took a massive hit because, the fundamentals have changed in terms of an inflation and interest rate standpoint since the fundamentals in June. So sorry to paint the grim picture here, but there is light at the end of the tunnel. I'm going to get into that in a second. I'm not really panicking. In fact, I woke up today feeling pretty good about this market, and I'll explain to you why I feel pretty good about this market in a second. Charlie Bilello, maybe he's Italian, I don't know. Current market expectations for the path of the Fed's rate, 75 BPS in November, followed by 50 BPS. I mean, this could be 100. The likelihood is it's 75, but this is just, the plot based on the latest statement. 25 BPS in Feb, pause, rate cut start in Sep 2023, continue in 2024. This is kind of the model here that we're looking at. So we're looking at a top in terms of the Fed funds rate in probably mid to late next year, and then we see a slight taper off. This would be the pivot here. Mid next year is based on the current models we're looking at. This pivot is basically the worst it's going to get for crypto. However, you do have to keep in mind that the markets are forward looking, so they are pricing in the likelihood of a 4.61% Fed funds rate in March or to May next year. They're not stupid, so it's not necessarily a scenario where we get to May next year and we go, oh, now it's topped, now it's time to go up. Because what will happen is the markets will price in things because the markets are forward looking. So it's very likely that we do see a bottom before the actual peak in the funds rate and before inflation starts to come down, because that is when things look their grimmest. When things look their grimmest, that tends to be when bottoms happen, which is why I don't think we're going to see the bottom towards the end of next year when things are at their worst. I think it's way more likely we see a bottom, like a true bottom on equities and Bitcoin towards maybe the start of the year or the end of this year. However, as I said, I don't have a crystal ball. That's purely my expectations based on FOMC. I know a lot of you probably agree with that sentiment, and a lot of other traders would agree and some would disagree. But I think, we just have to take the data as it comes, and we have to be adaptive in terms of our thesis, obviously sticking to a long-term thesis while being adaptive in the short term about how we actually conduct ourselves in terms of DCAing, in terms of trading, and that all relies on the data, because I think the best traders take in the new data, they take in the facts, they readjust their thesis, and they stay objective, and they don't make rash decisions. That is what makes a good trader, and I think we should all strive to have those qualities going forward. So just quickly before I get into kind of my plan at the moment, the altcoins I'm looking at, my buying plan, that kind of stuff, because I do want to kind of reestablish those plans, considering we did get some new data and our thesis was kind of reaffirmed here a little bit. Remember, you can sign up for a Bybit account, link in the description, get that $4,200 bonus. I'm sorry to anyone that got liquidated yesterday. I didn't trade yesterday for a reason. It was very, very risky. This market is very difficult to trade. However, there is something to be said for trading once the volatility decreases, because we saw those massive wicks yesterday. Once we get a clear direction, I mean, the clear direction's down, obviously, but look at this massive wick we got yesterday. Like, anyone trading this just gets stopped. So once we get more of a clear direction, or we start to get a more of a clear pattern with less of these scam wicks, I think that trading will become very advantageous, especially once we get close to what we think is a bottom. There's definitely something to be said for scaling into leverage longs. That is a strategy I'll probably discuss in a couple months. I don't think it's necessarily responsible to talk about now, but in a couple months, that's something I'll be doing, and I'll be sharing that with you. Maybe even in tomorrow's show, I'll go through some more in-depth plans on how I'm actually buying. The title of that video is going to be why I'm selling all my Bitcoin. Sorry to leave you hanging here. I'm going to answer that question in tomorrow's show, because that is an entire show in itself, why I'm selling Bitcoin. And I'll explain to you my logic there and what I'm actually doing instead of buying Bitcoin. Okay, so the first thing that we have to kind of affirm here is your strategy, your research strategy, your plans. I mean, this is all coming to a boiling point now, okay? So we kind of have this thesis, right, that post midterms, we're going to see a bottom, all right? Maybe in the short term, we do see a price rise. So I'm hedging against a potential run-up pre-midterms with a few plays. I'm not too heavily exposed to the market right now. I'm pretty heavy and stable still, because when I look at my long-term time horizon on buying, so the projects I'm willing to hold for 2 to 3 years, yes, I am DCAing, so I will DCA slowly at the moment. That plan has never changed, so I always buy. However, I significantly do ramp up my buys when I think the opportunities present themselves to do so. You could argue now is a DCA opportunity for those super long-term holds. Can't fault you there. The majority of my cash, the majority of my capital probably is reserved for post-midterms in terms of those ramped up DCAs. That's when I'm looking at buying my Near protocols, my Solanas, some of these riskier alts, which we're going to talk all about over the next few months. I am dedicated to finding the next 50x for you guys. That is literally my goal. Right now is just researching small caps, finding the next 50 to 100x, finding those ecosystems. I already have some absolute gems that I'll be sharing with you guys over the next couple months, but I'm not actually buying them until post-November, so I haven't felt the rush to share them now, but we're definitely going to start doing that. In the meantime, until midterms, I'm looking at the World Cup plays. I did a video on it yesterday. Chili's, Algorand, just some small longs. Hopefully, we can make some returns on those trades. They are at a slightly better price to buy today than they were yesterday. So I'm going to scale into some of them over the next 14 days. Hopefully they pay off, but the majority of my capital is reserved for post-November. That's just to keep some interest in the market and keep some exposure to the long side of the market. Those are my plays for that. But the main thing right now that you've got to be doing is actually betting on your abilities and skills. So I'm basically betting big on myself for next cycle. So I'm not 100% sure any token will perform. I think if anyone speaks in absolutes and tells you that a token will perform, a token will pump, a token will 50x, a token will overtake Ethereum or Bitcoin, they're lying to you. No one could be 100% sure, and I'd be lying to you if I told you I was 100% sure that any token will perform in this market. But what I am 100% sure of is my skills, and I am 100% sure of my abilities to find that next 50 to 100x. So I think right now it's all about increasing your skills, increasing your abilities, and bet big on yourself. I'm betting big on myself. Every day, I bet big on myself through education. I bet big on myself through putting my money where my thesis is. That is what you have to do to succeed in this market. We're not betting on projects. We're betting on ourselves. This is one pro tip that I'll share with you right now for betting on yourself. It's actually a very easy one to implement because there's layers to this stuff. The first layer of the funnel on education is consuming content. The next layer is applying it. The next layer is getting more involved with projects. There's steps. I want to kind of build these steps over the next few weeks for you guys. One way I'm doing this is through my Twitter, where I'm posting series of video tutorials on ways that I actually find gems. And I'll be putting this on my Twitter. So if you aren't following my Twitter, I'm sure you are, but if you aren't, link in the description to my Twitter, because this is where I'm going to be releasing these gems, one a day or one every 2 days, where I give you video tutorials on my favorite strategies for actually finding gems, finding alpha in this market. I'm going to give you a simple one today to start to kind of prep your research. This is something that you should be doing, but I know most of you aren't doing it because I did a poll the other day and most people actually weren't doing this. So I think you need to be doing this if you aren't. It's very simple. So all you need to do is create a brand new YouTube account. There's some very good quality content on YouTube. Why do I like YouTube? Well, let's just think about this show, for example. So I've spent hours cumulatively over the past few days researching macro, researching the tokens that I'm about to speak about. And I spend a lot of time every single day researching, probably, 3 hours a day on project meetings, 3 hours a day researching on Discord. And I know a lot of creators do as well. I know a lot of other creators do a lot of research. So by watching YouTube shows, sounds simple, but what you're doing is you're condensing their maybe 3 hours of work into 10 minutes of watching. So you're getting a very time efficient spend by consuming content. That is why every single day I watch half an hour of crypto YouTube. It is the best thought provoker you could possibly ask for. If you watch a video, and I'm sure even watching right now, you're getting ideas, you're getting thoughts off based on what I'm saying. You might not agree with those thoughts, but at least it's starting to tick something in your mind that can lead to another thought process or lead to a thesis. So by watching content, you're getting exposure to multiple points of view. It's very important. So create a brand new YouTube account, subscribe to a list of quality content creators, and set aside 30 minutes per day. If you watch on double speed, you're going to be able to watch an hour worth of YouTube content in 30 minutes. 30 minutes is nothing, guys. You probably waste 30 minutes on Instagram a day. Just look at your phone screen time. You literally probably waste an hour a day on social media. I don't consider Twitter, Discord a waste if you're effective with it, because you are learning, and nor do I consider YouTube a waste if you're effective with it. The problem with the YouTube algorithm, though, is that there is a lot of entertainment because they prioritize showing you videos that had watch time. The videos that get watch time are the videos that are clickbaity, are the videos that kind of are very entertaining and educational. They should go hand in hand, but they don't always go hand in hand. That is why I recommend you actually start a new YouTube account. Of course, you can use your current account and you can just clean it up a little bit, but you want to clean up that subscription list of pure alpha creators. So I created a new YouTube account and started from scratch. You can keep your current account if you want and just tweak who you're subscribed to. But I created a new YouTube account and I made sure I was subscribed to only the best content creators. So I have a list of 20 people that I like to follow. You can find them the ones that you like yourself. One of them is obviously Crypto Banter. And there's some other great creators out there, like Elio, Calculator Guy, Dynamo DeFi. Like there's many smaller accounts as well that are good. I watched Unchained. I watched All In Podcast. I watched Tasha Labs Macro. There's a lot of great YouTube channels, right? So if you create a subscription list and you just spend 30 minutes a day scrolling through that, making sure you're up to date with those 5 to 10 new videos, then you're always staying on top of the curve. The key here is following quality. So what you need to do, and this is my best tip for actually getting something from a video, because your brain doesn't really operate passively. What you need to do is you need to actually write down 3 major takeaways. So let's say you watch a YouTube video. The video is on GMX, for example. They talk about GMX. What you want to do is you want to write down every single time you watch a YouTube video. You can just do this in notes, a notepad, however you like, is 3 key takeaways. Just 3 key takeaways. So one might be, okay, GMX's fees just cost $1 million. GLP staking is used to pay back a percentage of trading fees back to stakers. And then the next takeaway might be GMX is a bear market hedge, or GMX is a bear market project. I'm just using this as an example. And what you would then go and do is you would take those 3 takeaways that you just wrote down from watching a video, and under each takeaway, you'd write down an action. So for the first point, you might write, research white paper. So it gives you an actionable step to actually apply knowledge, or at least dig deeper into the knowledge that you've learned from a YouTube video. Under the second takeaway, you might write, join Discord and ask 3 questions, because there's probably questions that you don't know, like how does the buyback mechanism work? How do you stake? Like there might even be basic questions you want to ask in the Discord. That could be step number 2. And then step number 3 might be, read the Messari Q3 report, for example. Look through some of the data a little bit deeper, and maybe even if you wanted to apply that knowledge even further, you could just write on a Google Doc or a Twitter thread or a Medium article some actual information that you just learned. So actually write it down using what you learned. The way your brain works is through active recall. So your brain isn't very good at consuming information passively. What you've just watched over this last 20 minutes, you will probably forget by tomorrow. You probably won't remember what I said. Maybe you even forgot what I said at the start of this video already. That's because your brain isn't very good at taking in information. It works and it solidifies memories by recalling information. So to recall information, essentially what you need to do is take knowledge you've learned and apply it. That is why I have this 3 key takeaway rule for every time I watch a YouTube video, of writing it down and then creating an action off the back of each takeaway. That way you are going to actually action what you are learning. That is how you solidify knowledge. That is the secret that I have used to learn so much about this market. The reason I can basically speak about any project off the top of my head, and I know a lot of data off the top of my head, is because I always write about these projects throughout my day. I always write down. I've got a massive notepad just behind me here, which is just full of notes on projects. So the more you write down and actually apply this knowledge, the more you will remember. So create that YouTube feed, curate it. You can do the same for Twitter as well. Curate it, make sure you're following the right people, put them on a Twitter list, and start consuming quality only, because now is the mode where we are finding that next 50 to 100x. Now is the mode where we are finding those next projects that are going to perform well next cycle. And now we are in full research mode. We have a little bit of clarity over what this Fed strategy looks like. Obviously, that is subject to change. What I do know is we need to get our list together soon, because there'll be massive buying opportunities from November onwards, maybe Q1 next year. This is happening soon. This a few months will creep up on you like that. If you don't have your list now, you are basically planning to fail. You need to have a plan, and that's what I'm going to help you do using this show. In fact, next week I'm going to do a portfolio video to help you guys kind of identify some of these projects. But I don't just want to kind of give you a fish. I want to teach you how to fish, because I can give you a fish and you can eat for a day, or I can teach you how to fish and you can eat forever and you can eat every single day. So this is just one of the little gems, the very basic ways that I use, methods that I use to consume content. But we're going to get more and more in depth in these shows and actually start to break down some very complex stuff. I'm going to run you guys through tutorials on Token Terminal, how to use CoinDix, how to properly scan for data, and look at data objectively, how to cross-reference data. There's a lot of stuff we can actually do moving forward. So look, I was actually going to do kind of an altcoin Q&A. I actually might answer some questions. I was going to go through some of my notes here, because I did ask the community what projects they were looking at, and I was going to talk about it. But I'm thinking maybe just flick it to the comments and just interacting with you guys today. That's kind of the mood I'm in. And then tomorrow I'll go through my pre-planned research. You guys can see I've got 20 tabs of pre-planned research on altcoins. I'll probably share that with you guys in tomorrow's show. And I'll also tell you why I'm selling my Bitcoin. But I'll just answer a few questions over the next, let's say 4 minutes, 5 minutes. So yeah, answer some, ask about any project, anything you want to know in the comments, and I'll kind of answer. This guy couldn't teach you how to tie your shoes. I learned how to tie my shoes at actually a very young age. I think I was like, I was pretty young, like in prep, learn how to tie my shoes. Pretty good at it. Can we eat a fish on the couch back there? Yeah, you can. So if you want to come over, you can eat a fish on the couch. You're welcome. Opinions on Cosmos. Yeah, I'm just going off the dome here. As I said, I can speak about most projects off the top of my head because I've done so much research on them. I love the Cosmos ecosystem. I love the Cosmos SDK. I think it's some of the most impressive tech in crypto. My only issue with Cosmos, and I've said this before, is how it accrues value. So although the chain is very good, although the tech is very good, a lot of the best projects are built on Tendermint, which is kind of like another subsidiary chain of Cosmos. So a lot of the best projects are either built on the SDK, they don't accrue direct value to the Cosmos token, or they're built on Tendermint. So the problem is, the main way the Cosmos token accrues value is through airdrops and obviously staking. That isn't as linear from a network growth perspective or a network effect perspective as another L1 like a Solana or ETH would be, where you have it as the gas token, where you have it as the primary token. For example, Solana, it has one base layer. It's a single global state, meaning it doesn't fractionalize any liquidity. It's centralized on the one chain. Centralized not in the essence of decentralization, centralized in the sense that the one chain conducts all the transactions. The one chain is home to one token, which is the Sol token. That way, there's no fragmentation. Whereas you have a chain like Cosmos, where you've got Tendermint, you've got the SDK, the Cosmos token itself isn't really gas. So there's some issues there from a token value accrual side of things, which is why kind of Cosmos is a great, I guess it has become a good play from a psychological perspective, because it tends to pump just because that narrative is really strong and the Cosmos ecosystem is fucking awesome. But I just can't give you, I'm just not buying it personally for that reason. I just don't feel like it's the best play. I think there's better interoperability plays. Yeah. You've got like Credo, you've got Dot. I honestly kind of prefer Dot over Atom as a buy. Yeah, it's been very solid. I don't hate Cosmos, by the way. I like it. I just think there are better buys. And there are better L1s. You can't take it anymore. Come on, bro. This is where millionaires are made. This is where you need to be paying attention. So many people get this wrong. This is the time. This is the time to dig deep on research. I know it's hard and I know it's demoralizing when you're losing money. Trust me, I wish my portfolio looked like it did back in last November. And I'm sure you guys do as well. But the reality is we're getting a huge opportunity right now. And this isn't an opportunity you want to pass up, because these next 6 months will literally be defining. Everyone's going to leave this market. There will be many, many people that are just going to leave and never come back. In fact, the majority of retail have already left. Just look at the viewers on this show. There's 570 of you. Back even in March, I was getting like 2,000 viewers per show. The viewers are dropping. The Twitter engagements are dropping. The buyers are dropping because everyone is short-sighted and everyone has weak emotions. We're actually the strong ones, so don't lose that strength, because literally, if you look back at 2019, 2018, the ones that succeeded in 2021 were the ones that were putting in the work when no one else wanted to. I mean, even just look at Ran. 2017, 2018, Rand was the one investing in projects, researching into projects, building his show on CNBC during a bear market. And then, when things exploded, that he kind of reaped the rewards of his labor because he was the one that was there when no one else wasn't. My first Bitcoin purchase was in 2019. Deep bear market. I bought Bitcoin for 5,000. Fast forward at 6 months or fast forward 12 months, that Bitcoin had more than 10x, and so had my Ethereum position. So it actually pays right now. It pays to play. It does pay to play. Is layer 1 ever going to have any value? I think, are you saying layer 0 or are you saying layer 1s in general? Layer 1s in general will have value. And if you saw my thesis on my show 2 days ago, I kind of explained to you why I think the future of L1s are kind of going to follow this multi-planetary, or as Haseeb said, kind of multi-city model of like Ethereum's your New York. You've got like Near Protocol as your San Francisco, and there's multiple different cities all filling different niches. And I think that is the future of crypto. And then obviously to connect all those L1s, you're going to need bridges. You're going to need interoperability. You're going to need great DEXs, cross-chain DEXs. So all of that infrastructure is where I'm placing some of my big bets. And we'll get into those projects in the near future. But yeah, that is kind of my narrative, and that's my thesis. Before you can buy any project, you have to define your thesis. I'm pretty clear in my head that that's the thesis, and that is how I'm trading, and I'm buying projects accordingly that fit into that narrative. And I'm also diversifying into other narratives like gaming. There's some DeFi players that I think will perform well, etc. But that is kind of my mentality here. I believe Bitcoin is money. I can't wait for you to see tomorrow's show, Joby. I'm going to talk about Bitcoin, and I'm going to tell you why I'm selling my Bitcoin. I believe Bitcoin's money too, but I also believe there's better chances to make money. Much, much, much better chances. Frax super volatile. Yeah, I think Frax certainly succumbed a little bit to the stablecoin announcement. In fact, I do have a document up here on the stablecoin bill. Basically, they were going to require state regulator approval for any projects, or essentially ban for 2 years any projects that were algorithmic stablecoins. Frax is only 8% algorithmic as it stands. And I think there was a lot of FUD when it first came out surrounding Frax. It does add another headwind. I'd be lying if I said... Sorry, I'm just like a bit sick. I'd be lying if I said the fundamentals hadn't changed a little bit, because they certainly have. However, I don't think it affects Frax directly. I've done a lot of research into this, and there's nothing in this bill that technically implicates Frax. It only does if they're extremely lenient with their definitions. So if they do take their definition as kind of a wider stance, and they start to incorporate anything with a slight algorithmic component or collateralized with other digital assets, then it becomes an issue. But then again, how do they define what isn't a digital asset? So you can't say USDT is a digital asset, even though it is, right? But if you do, you're banning a ton of stable coins. So Frax is obviously backed by USDC and also backed by Frax share as well. So yeah, it's a little bit iffy. I'm waiting on any new Frax buys to kind of see how this plays out a little bit. I don't think there's an immediate path. I think it probably is a good accumulation opportunity if it gets hit and isn't actually regulated, but there's no immediate path out for Frax right now, so there's no rush to buy. Oasis protocol, security layer. I do like Oasis. Although there's probably projects I prefer in this niche. I think Secret Network and A0 are better security L1s. A0 is fantastic. I probably prefer that over Oasis. And you kind of have to be selective here. You can't just own every project. All right, tomorrow, I'm going to pick up this conversation. We're going to go through these 20 tabs of research on projects that I am looking at accumulating. And then I'm also going to tell you why I'm selling my Bitcoin. Thanks for hanging out today. I enjoyed this stream. And yeah, good luck with everything in this market. Make sure to get busy with your research because there are huge opportunities on the horizon. And I'm here to help you every day to realize those opportunities. And I'm honestly feeling great today. I'm feeling very optimistic about the future of crypto, despite what the Fed may want you to think. All right, I'll see you in the next one. Peace out.